2 trillion. That's the only number you need this morning. It's options expiration day with 2 trillion in options and derivatives expiring. Stocks have recovered close to $7 trillion in value off the lows, and now traders have to decide whether to roll over those options or initiate new contracts. Before we dig into those numbers, a little something to put a smile on your face. Sometimes you have to slow down and let the family cross the road. I came across this lovely family on my way to the studio this morning. Welcome to the Money Runner. It's Options Expiration Friday, August 19th. This is your Market Minute. I'm David Nelson. They say a picture's worth 1,000 words, and this one speaks volumes as to why the melt-up in equity prices the last several weeks. Investors love low volatility, and since the June lows, the VIX, which is the Chicago Board Options Exchange Volatility Index, that's drifted lower. The other side of that trade is a market that's pushed higher. In fact, the S&P touched the all-important 200-day moving average just this week. We haven't seen those levels since April. For bulls to convince the bears the rally isn't over, the S&P 500 is going to have to start living above that line. Until then, the bears have a pretty good case. The Fed is showing no signs of slowing rate hikes anytime soon, despite the fact that futures traders, as we pointed out yesterday, are betting just the opposite. They believe the Fed will be forced not to just stop raising, but will in fact start cutting by this time next year. That mindset is certainly a big part of the rally. Many of the Fed governors in conversations with the press have repeated their stance that the Fed has to remain focused, taking rates to whatever level is necessary to snuff out inflation. Neil Kashkari, Minneapolis Fed president, has switched from dove to hawk, saying on CBS's Face the Nation, "We're a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to." Stocks are all over the place this morning. Futures are down. There's a wide gap between winners and losers. Foot Locker and Bill.com are up about 20%. Deere is off about 5% on an earnings miss. And Bed Bath & Beyond, the darling of the meme stocks, is off close to 42% in early morning trading on the heels of Ryan Cohen completing the sale of his shares. A lot of moving parts today. Remember, how we close today is a lot more important than the open. I'll see you Monday night with the full-length pod, and of course every morning next week with the Market Minute. Have a great weekend.